Hi, my name is Bruce Bolger, and I'm founder of the Enterprise Engagement Alliance, and we're a think tank and implementation organization related to how organizations implement stakeholder management across the enterprise. And today we're doing an update on the state of stakeholder management with two of the people who, one of them was actually, I would credit as being a founder of the theory and implementation process and framework. That will be Freeman, Edward Freeman, and he's professor of business of administration at the Darden School at the University of Virginia. And he's author of Strategic Management, A Stakeholder Approach, written in 1984, which really lays out the framework of what many people now call stakeholder capitalism. And then we have Martin Whittaker. He's CEO of Just Capital. The organization is an authority on corporate stakeholder performance. They helped launch an ETF at Goldman Sachs, demonstrating the principles of the stakeholder approach in action. And they've created an outreach group with, I think, the most impact of anybody in the whole area of educating people on the economic benefits of doing good for your stakeholders in the environment. So before we get into this discussion, I actually have to always thank our customers, but I'm going to pass on that today. I'm afraid the slide isn't there. But I do want to quickly talk about, we have to always talk about what are we talking about in terms of stakeholder management and stakeholder capitalism, because unfortunately not enough people have read Ed's books or know of Martin's work. And so one of them, the sort of general definition that we're going to kind of quickly discuss is that of Thomas Cole. He's CEO of Strive Asset Management. Many people have heard of him because of Vivek Ramaswamy's candidacy. Strive claims to be the anti-stakeholder management or capitalism group, and it's the theory that all stakeholders matter and matter equally, that you can serve multiple masters at once, and that you can do good while also making money. Clearly, he doesn't think that's possible. And organizations like the Enterprise Engagement look at it more as a system, as a method of enhancing returns for investors only by creating value for customers, employees, distribution and supply chain partners, communities, and the environment. So it's about aligning the interests of people. And that definition does come with the help, thank you, of Martin Whittaker and also of Alex Edmonds of the London Business School of Finance. Anyway, I'm now going to stop the screen, and we are going to discuss now. I'm very sorry here. We're going to talk now, starting with Ed. Ed, when you wrote the book in 1984, did you view this as an ideology? Were you the sort of the new communist, the new socialist? Or did you envisage a better way of running businesses?
Well, I thought what I was doing, I was a PhD in philosophy, so I had no business training. I thought I was just figuring out how business worked. It seemed to me that every business created and sometimes destroyed, usually they didn't mean to, they tried to create value for customers and suppliers and employees and communities and the people with the money, and that those things went together. I thought that was, and I still think that was true. That's what business does. How could it do anything else? Try creating value for one of those without the others. You can't. Their interests are interconnected. And in fact, I thought it was such a simple and obvious idea. Again, I didn't know much about the business literature. I thought it was such a simple and obvious idea. I didn't even think it was the most interesting idea in the book. I thought the most interesting idea in the book was I talked about purpose and what purpose-driven companies could do. And this all came from, I didn't just make this stuff up. I was working with a whole bunch of companies while I was at Wharton at the time. And this made sense to them, and it made sense to me. So I never understood why this was some kind of radical thing. I love business. I'm the most pro-business sort of person around. I just think to understand business, you better understand its stakeholders, and the idea of purpose. I thought they were both important.
Well, without purpose, you can't align people. Martin, tell you guys got involved with this quite a while ago, and it was interesting that one of your first activities was working with Goldman Sachs to create that ETF, which I think has continued to do pretty well. So it seems to me from day one, you guys, and this was before woke, and this was even before all the brouhaha about ESG. I was there when you started. How do you think it became politicized? And I only mention this because if we don't discuss what this is, what are we discussing, right? Are we discussing taking money away from shareholders to give to Black Lives Matter, or are we discussing better business? So how did it become politicized?
Well, let me say, first of all, Ed, you are a true visionary, because purpose itself actually is really at the root of this idea of what a company is about and what it means to create value for stakeholders. And, it's interesting in your opening, Bruce, you said Strive, that comment from Strive, their biggest holdings are also just companies. Apple, Microsoft, I bet you Bank of America's in there. So it's interesting to me. It's a really sort of, I make that point because this idea of the politics of stakeholder capitalism and stakeholder performance is, I think, a sideshow. I think it's a distraction that's really there to win votes. Let's be honest. Politicians, the reason why things get politicized is because politicians want to get elected. And to get elected, you got to win votes. And so that's the goal. That's the purpose. But if you've ever run a business, if you ever run a company, and I don't care how big the company is, you must think about value creation for your stakeholders. It's just the way you do business. And Ed knows that. I bet you any CEO in America will tell you the same thing. It's why the Business Roundtable changed the definition of a purpose of a corporation. This is not a sort of even an ideology so much as the way business, the reality of business today. So, you create value for your shareholders by creating value for stakeholders. If you're not creating value for customers, you don't have a business. If you're not creating value for your workers, no one's going to work there, and you certainly cannot attract and retain the best talent. So, I could go on, but to me, this thing has sort of been distorted. It's been pulled in. It's just been sort of exploited by people for their own purposes. And I would say the left and the right. I'm not having a dig at any sort of political ideology here. I just think it's become politicized, and that's a bad thing. But in actual fact, companies, as we know at Just Capital, because we're tracking companies all the time, companies are not pulling away from stakeholder value creation. They're running to it, because that's how you compete and win in a 21st century economy.
So, thank you very much, Martin. So getting back to you, it seems to me that really one of the big problems we have is understanding that it is a system, right? And I try to help people understand it, and maybe you don't agree, that it's really, in a sense, total quality management for people, where you look holistically at your entire organization against your purpose and aligning the interests of all stakeholders. Now, that's easier said than done, because both of you know, and Martin, you particularly know, silos in organizations are a tremendous obstacle to implementing a stakeholder approach at the practical level. And my only criticism before I turn this over to your question, to the question to you, Ed, of well-meaning people, the World Economic Forum, I think all well-meaning, Business Roundtable, Larry Fink, when they issued these proclamations, they didn't about stakeholder, they didn't really have a plan. Okay, what does that really mean? Does that mean giving donations to organizations? Or does that mean, no, orienting my organization toward a purpose, where I engage everybody toward a common positive goal. So, Ed, don't we have a fundamental learning program here? I mean, in other words, does a CEO, okay, what does this really mean? How do I align the interests of people? What does this really mean? Don't we have an actual, it's more than just a pledge, isn't it?
Well, it is, but again, I don't think there's one system that works for everything.
Right.
The beautiful thing about business is that it's what philosophers would call a family resemblance. There's not much in common between the guy who's the shoe shiner in a Hong Kong market and Exxon. And so but both have to deal with stakeholders. There's no question about that. So the search for kind of one system for everybody is, in my view, a fool's errand. It's things that academics do lots of times. So we ought to embrace the multiplicity of business and the diversity of the ways that you can run a business. I'm constantly amazed at some of the incredibly innovative ideas that people have. Every business, in a sense, knows how to do some of these things. What the problem is, they haven't kind of put them all together, and sometimes we use language, and I think the aligned stakeholder interest is part of that language that's not helpful, because aligning interest means the interests are the same in a way, and my sense is there's a better metaphor. The interests here have to be harmonized. In harmony, the interests are different, and they're going to be different. Stakeholders have different interests, but they sound good together. And it's when even though the interests are different, it's like notes in a musical composition. In harmony, notes are different, but they sound good together.
Yeah.
How do we get customers, suppliers, employees, communities, and the people with the money? How do we get those kind of going in the same direction? That requires innovation. It requires people thinking about, gee, if I do this with customers, what opportunities does that give me to what I do with employees? Or what opportunities does that give me with respect to communities? And it's thinking about things like that. You're right, in a kind of systems way. That's certainly true. That's there. I like the idea of total quality management for people. That's one way to say it. We need 10 more ways to think about it. It seems to me.
But here's the interesting thing, Ed, and I'll get to you on this, Martin, because I know you've had a lot of business experience as well in your career. When you look at the practical application, Ed, of what you just said in a real big organization, you face the fact that HR, sales, marketing, operations all have different mini cultures, often not harmonized, often battling for resources, right, rather than harmonizing. And I even think the UAW strike is a very big lesson on the fact that we're not even analyzing the value creation of workers. Where is anybody discussing the value that these workers are creating so we can figure out how much of the pie they should get? So, Martin, don't we face a fundamental structural problem in many organizations? It's not to say the same thing existed in the manufacturing in the 90s with total quality management. They had the same silos. They had to break them down using different systems. There are 30 different systems of TQM, right? Maybe more. So, Martin, getting back to you, do we have a structural issue in many companies of silos between HR, sales, marketing that hinder harmonization?
Look, I think that's a perpetual challenge in business. Look, the reality is the business condition, the business environment, the context in which businesses are competing and operating in society has evolved. For instance, the East India Company. So this is nothing new. This is businesses recognizing today how to compete and win, as I just said. I think to Ed's point, there's innovation happening in that, which is the essence of competition, and sure, breaking down silos, that's important in this context around the stakeholders, but it's also important, I would say, in many other contexts. And you gave a couple of examples going back as far as I can remember. I think one of the challenges is the following. If you're on the board of a company, or if you're a fiduciary, and I say to you, what is total shareholder return? You're going to get the same answer no matter which company you talk to, and there's a clear equation to calculate it, which if you do an MBA or if you get any kind of business education, you know what it is, and everyone's agreed. If I say to you, what is total stakeholder return, you're going to get a different answer. You probably get different answers within the same company. So that is the challenge, measuring and coming up with a framework, which Just has done. Others have done that as well, but Just has done that in a different way, which is essentially by asking the public, what do you think matters when it comes to being a just company? And you get these 5 stakeholders: workers, customers, communities where companies operate, the environment, and of course their investors as well, which is also encompasses governance. So that's
just
how we
to help the viewer here. Just to help the viewer, I'm going to interrupt you to further explain that. So these 5, you've surveyed America, and you have found that these are the 5 major criteria from which people value companies. So please explain how you turn that into your index, since you brought it up, and then we'll get to Ed.
Yeah, so we start. It's funny, Ed, you say you came up with this stakeholder idea. This is sort of, you must have been channeling the public. So
no, I didn't. I just showed who did. I've never claimed to have invented it.
No, you didn't claim to. I'm just telling you, there's a lot of overlap. So we, no matter where we go, who we talk to, we go all around the country. We've surveyed now, I don't know, close to 200,000 people, fully representative basis. And essentially the issues that get identified, by the public, we capture in our 5 framework model. And then the 20 issues that are divided into those 5 buckets: how a company treats its workers, customers, communities, environment, and shareholders. 20 issues across those 5 things. Those are also weighted by the public. So the public identifies the issues and attributes a weight based on how important they think they are relative to one another. We then at Just Capital go and gather the data to measure how the largest 1,000 publicly traded companies in America perform on all those issues. And we, with that, create rankings, the top 100, the America's Just 100. We create indexes. You can slice and dice, and we do. We create indexes for workers, the best companies for their workers, best companies for the environment, so on and so forth. You can do we divide it by sector. So you want to know which company does the best job of looking after its various stakeholders in a particular industry, or you compare companies direct head to head, because the model allows you to do that. And so the index we launched with Goldman Sachs, actually it's our index, we licensed it to Goldman to launch the exchange traded fund. That's pretty simple. It's every industry. It's the top half of companies in our rankings in every industry, market cap weighted and grouped together. So you got almost 500 names of the most just companies in every industry. And so those are the companies that do right by their stakeholders. And as you said, the business case, I think, is very powerful. We've looked at the business case every which way, and no matter how you pull it apart, you tend to get the companies that do the best job of value creation for the various stakeholders outperform in the market. They also have a lower cost of capital. They have higher levels of profitability and a whole bunch of other sort of accounting and business financial performance KPIs. So I think we've got a pretty good story. I feel as though, it's back to your question of politics, we see a lot of agreement in the country, even by political ideology, that this is what business, this is the expectations of business. we see agreement among business leaders that this is better business. And then you got the investor case. This is how you make more money, not less. So put all that together, I think you got a pretty compelling vision for how capitalism can work.
Well, it's funny because, a lot of Republicans agree with you, not only in your surveys, which, as you know, we read and report on, but also, do you know that 19 red states have public benefits corporations that were signed into law by Republican governors, including Mike Pence, including Ted Cruz? I haven't heard Vivek Ramaswamy advertising that Republicans have been leaders in public benefits corporations. For those of you who don't know what that is, that's a corporate statute that allows a corporation to freely run itself according to its stated purpose, as long as it's clearly disclosed to stakeholders. So that's a very simple view of it. So Ed, let's get into reality. I think Martin's organization has done an exceptional job at this, as I think we'd all agree. But if we were in a room, and by the way, we also have to give credit to Fortune magazine. I think the folks there, the editor there, and the editors there have done and publisher, I think Alan Murray's his name, have really done a terrific job. Although sometimes I think slightly confusing it themselves, because no one ever wants to agree on the definition. But Ed, getting back to you, implementation. If we had a room of CEOs right now, or senior executives, and I've had this experience recently, so I know what the answer is, sort of. You said, okay, this is stakeholder capitalism. What impact does that have on the way you run your organization? What does that mean? How will that change your organizational thinking? And my experience is you get sort of some blank stares. Now, you might see it differently, Ed, because you have students who've been taught and learned. But I'm going to ask both of you, starting with you, Ed, do you think general management really understands the way a manufacturing executive would understand TQM? And remember, TQM is a broad concept for having a systematic approach and a holistic approach. There are many, many different ways of applying that. So do you think many CEOs understand stakeholder capitalism really that it's a systematic approach that affects their organization? Or is it just an ideology and a nice to have? Where are we now on that, Ed?
Well, I think the question's a little bit confusing, Bruce. I talk to a lot more than just students.
I know that.
I talk to thousands and thousands of managers and CEOs all over the world. They don't have much problem with this idea, as Martin said, because they know if they're going to be successful, they got to have products and services customers want. They got to have suppliers who want to make them better. They're going to have employees who are signed up for the purpose. They got to be good citizens in the community, and they got to make money. That all those things go together. Now, what I think gets in the way is this other ideology. There is an ideology that says business is just about the money. Only worrying about the money is what counts. And that gets in the way because it's a little bit like the Molière character who is complaining because he has to learn this new language called prose. And somebody says to him, oh, wait, you already speak prose. It's how you talk. Companies do figure out how to deal with their stakeholders. When they figure out that's what they're doing, then you can improve it. There's no question about that. That's why sort of adapting the stakeholder language, et cetera, is so important. Adapting some of the measures that Martin has talked about is so important. You can then really improve the hell out of what you're doing. And that, to me, it's not that people don't understand that there are stakeholder relationships in the world that need to be managed and influenced. They don't understand always how they're interdependent.
Yes.
Because of this other kind of ideology that may have been useful at some time. I don't know. I tend to think it wasn't. That it's business is just about the money. It's clearly not, again, what the public expects. And I don't think that's what we expect of ourselves. And so the sooner we can kind of leave that behind, the sooner we can get to trying to figure out, and you see companies doing this. Oh, wait, I can figure out how to get customers and employees going in the same direction. I can figure out how to get suppliers who are really gonna make me better. And those are the kinds of things that need to happen. I've had absolutely no trouble talking to executives about that. They get it right away.
Well,
And
here's I did give you a bad question. Thank you for correcting me. Here, I'll make it real simple and give it to Martin. It's one thing to say to harmonize the interest of customers, employees, stakeholders, and communities. I agree. That's the fundamental harm. But how do you do that, right? That's the issue. How do I make how do I get my advertising aligned with the promises that are actually being delivered, right? How do I make sure that the ad agency is actually promising something that the talent who might come to work for me? Did you see that survey, Martin, that almost all HR people admit to having lied to people about jobs, right? So Martin, let me ask you this.
Human beings, we're all human.
Well, and we work for our boss who tells me to go out and recruit people, and if I don't, I lose my job. Oh, did you this? I loved the other Edelman survey result that came out last week. 78, Americans rate, or the world rates employers as the most trusted institution, but 78% of people say they're worried about losing their jobs. So we're in a funny world. But Martin, getting to the implementation of this, and I know you've done a great job because I think you told us that 350 people, companies, have responded to your opportunity to review their findings. So answer that question, or maybe flesh that out. And then number two, from a practical standpoint, do companies know how to harmonize the interests of stakeholders? Do we really know how to do that, or are we fumbling and finding our way?
Well, it's the process of striving that creates winners and losers. I mean, that is the perpetual tension of business, isn't it? Nothing stands still. So you're constantly trying to examine ways you can create more value, and I think that's how business is. So you said 350. Actually, this year we broke that record. This is not public yet, but we were, I think, just shy of 400 this year. So companies, even with the whole ESG pushback thing, we're seeing record levels of engagement at Just Capital. So I think the answer to your question is every company's in a different spot. And the first thing you got to do if you're a board member of a company or a CEO or a senior executive is, where are we today on our performance, on value creation, let's just use that phrase, for our different stakeholders. So let's just figure out where we are. Then let's figure out where we need to focus. We can't do everything. So where should we invest? Do we have a real stakeholder challenge with our workforce? For example, if you are, I don't know, GM, just to pick a company randomly, do we have a challenge right now? Do we have a challenge with our customers? Or maybe there are other stakeholders that don't believe, or we don't feel like we're creating value for them. So that process I see happening. I see companies saying, where are we right now, Just Capital? What do we got to, where are we strong? Where are we relatively weak relative to where we want to be or relative to competitors? And then the final question is, well, what do I do about it? Mm-hmm. What does best practice look like? And what does best practice look like for me, my size of company, the industry that I'm in, maybe the geographic location, maybe the specific nature of my customers? And it goes back to something Ed said earlier. I agree. I don't think there's a single unifying theory of stakeholder performance. There's a framework we can agree on, and I hope that's the JUST framework. But there's a framework we can agree on. We can agree kind of what it means. I think we can certainly agree it's in the best interest of shareholders. Certainly, it's in the best interest of the country, no doubt about that. And so, how do we get better at it? And that's when individual company leaders that I see and that I work with, now, admittedly, that's kind of self-selecting group who, if they think the whole thing is a waste of time, they're probably not responding to Just Capital or showing any interest. But I even companies that are low in our rankings, honestly, Bruce, reach out to us and say, how do we get better? And I think, I honestly think there are so many business leaders, and Ed educates the next generation of business leaders. I think that's a really interesting group too, of upcoming future business leaders. How do you equip them to understand what it really means in a business context? And like anything in business, you got to measure it. You got to gather the right data. You got to have, KPIs. You've got to have objectives, targets. You got to do things that help you learn how to do it better. So that's how business works. And it's no different when you're investing in human capital or trying to create a new product in a new marketplace, or be a better corporate citizen because you think that your roots to the community are really what help you, drive a competitive advantage. Chobani is a perfect example of that. So I think it does mean different things, but that's okay. And the harmonization really comes at the company level, and it's a continual investment and a continual process.
Well, as we've learned, sorry, go ahead, Ed.
I just add one thing. I think Martin's absolutely right here. And this question about how do you do this is hard. It's hard because we don't always understand the interconnection, how customers are connected to employees, to communities, to suppliers, etc. Tell you just a quick funny story. A long time ago, sometime in the 80s, I was asked, I had gotten into a letter writing thing with the CEO of General Motors then. And so they invited me to the research labs to show me all the stuff they had done on stakeholder theory. I'm a pretty young guy, and I go up there and there are stakeholder maps on the wall and somebody tapping on a computer to put input in, and they clearly done a bunch of stuff, that I was arguing for. And I look at all this and I say, you talk to any stakeholders? And they said, well, no, we haven't had time to do that. And my face just fell, because there's no substitute for real stakeholder engagement. That's what has to happen if you want to understand how to harmonize the interest of, let's say, two stakeholders. You got to be engaged with them. You got to have the people who are engaged with them working together. And if you don't have that, you are going to fumble around, etc.
Well,
Bruce, let me just. Sorry, I got to support that. That is so, we see that all the time. I think companies that don't understand their stakeholders are, especially today, apt to make mistakes. You make assumptions about what you think stakeholders want instead of asking them. And the world we live in today I've said this 100 times before, it's not a trust me world. It's not like, we got it, trust us, we're going to get this right. It's a show me world. And we're like, okay, my customers, what does it mean for me to create value to you? How do you think about that? And then I'm going to show you, I'm going to give you the data. I'm going to show you what I'm doing. You can make it your own mind if you trust me or not. And I think a good example is sort of Ben and Jerry's. Their politics. They're out there. They're out front with it. They don't hide it. And if you don't like their politics, don't buy their ice cream. And it's right out there, and they're comfortable with it. And I think that's a good example of how a company that sort of is very clear on what it means, puts it out there. There's no there's no sort of hiding that, and then the stakeholders can choose or not to use the product. But I think we've seen it. There are examples. Bud Light's probably a good example of companies getting in trouble or making missteps when they don't really understand their stakeholders?
Well, worker voice, employee stakeholder voice is the fundamental principle, I think, of this whole discussion. And it's a free voice. It's an upward voice. It's continually built into the organization. But before we move on, you guys have said a couple of interesting things. First off, getting back to, I don't think people understand the significance of so many companies engaging with your ratings. And I'm going to give you quick history. A woman named Lori Bassi, a very esteemed human capital analytics woman, expert from Georgetown University, came up with something called the Good Company Index in the 2000s. We actually created a mock ETF out of it. Well, guess there were 500 companies. She FedExed the rankings to all 500 CEOs. If I believe she FedExed them. Martin, guess how many responses she got? I believe it was 0.
Oh, 0. Okay.
I think
All
it was
right.
0. I think in her third year, she got it up to 5. And by the way, she had to finally abandon it. She didn't have the tremendous backing you folks had. But we actually created an ETF, a mock ETF for 6 years based on her methodology of employee engagement, nearly not as thorough as yours, 13 different sources, employees, customers, and communities. And the ETF outperformed the S&P 500 by 37 percentage points. And it was absolutely transparent. So Ed, though, the other thing that I heard very interesting, getting down to the nitty gritty of this, people understanding other stakeholders. HR, I'm very involved with the HR field. And there are big debates about how HR can be more relevant, more strategic. And do you know that in none of this do I ever hear anybody doing surveys about how the impact of HR is on customers? There seems to be this systematic lack of understanding between promises being made and promises being delivered. Isn't this really one of the fundamental issues that when we're going to start getting stakeholder oriented? I loved what you said, Martin, starting with the gap analysis. Having our North Star, where is it? Where's the gap analysis with all our stakeholders? Thinking, don't try to solve the whole problem at once. Focus where you can. But Edward, don't we really face this? I mean, it's really pretty endemic. There are 250,000 HR professionals out there, and there's almost no discussion about how do we evaluate HR against the internal customer, against the external customer. That, I think, is a mindset issue, isn't it?
It is, but it will change. It has to. Think back to the pre-Walmart days. Nobody who did marketing thought very much about supply chain. The idea of supply chain didn't really come up. That was for people in operations to deal with. The genius of Sam Walton was to figure out that customers and suppliers, you could think about those things together. And once you thought about them together, you could really, you'd make a lot of money, but you could also be much more efficient. And he changed the very nature of business by doing that. I would love for people in HR to think about, I'd love for them, first of all, to be sure they were thinking about what's good for employees. I think that's one of the things that sometimes gets lost. But I'd love for them to think about how they have a sense of value creation in the whole enterprise. A long time ago, in my old 84 book, I had a chapter on internal stakeholders that nobody read. And the problem with thinking about in companies, because of the silos, etc., as you and Martin have said, that's an old problem. They saw the stakeholder idea as a way out of that. But somehow what got lost was they had all these internal stakeholders, great, and you could figure out how to negotiate with them and do all kinds of things. But if you didn't touch somebody in the external world, this was all useless because, without customers, suppliers, employees, communities, and the people with the money, having a nice environment inside was pointless. And so it's making that touch to folks who are outside the boundaries of the company that oftentimes is difficult for at least a lot of the HR systems, etc., that I know,
Well,
and
we recently
that needs to stop.
Well, we recently did a show on labor management relationships, and it was really interesting with some really cutting edge people. And they were saying labor negotiations should not occur without other stakeholders. You've got to take into account customers. And they actually gave, Ed, you would have been very proud. They gave an example of the union cooperating with management on how to address a better connection between patients and employees.
Yeah.
So in other words, the union became a source of value creation by collaborating to fulfill organizational harmonizing interests, shall we say. So I think the other thing, Martin, I'm going to give you both an opportunity. I'd like to hear from both of you sort of your views of the future going forward, but I want to ask you one last question before that. Whether you like it or not, there's something called the European Union Corporate Sustainability Reporting Directive coming about. And Ed, I have read the entire document, and I've all read your book, and it's as if they read your book. There's actually, I won't say they didn't, but purpose is the starting of everything. A voice is critical to everything. The entire concept of harmonizing stakeholders. It isn't just about employees, it's about all stakeholders. And as everybody knows, the European GDPR, the data protection regulations had an enormous impact. Starting with you, Martin, it would seem to me that we could see a fair amount of impact because, by the way, as you know, Bank of America runs on their ads now, as you know, that they have been ranked high by Just Capital. That is seen as a competitive opportunity. They are seeing that as a good thing. Isn't this law going to it's going to force companies, by the way, Ed, to disclose turnover, pay equity, diversity, incredible disclosures. Do you think this could force, unfortunately? I mean, regulations aren't always good, but they certainly put attention. So I babbled on, Ed. What do you think?
Well, I think it's definitely going to focus attention on the underlying issues. Many companies do report on a lot of that. We get our data based on what they're already putting out. It was a bit like the environmental reporting regulations, I remember, that have come into place over the last few decades. Several companies, or many companies, will just know it's coming and get ahead of it and gather the data and so on. But no doubt, the European CSRD is going to absolutely require companies to gather data and report information on a whole bunch of things. And some will be comfortable with that, others won't. I think it's also, therefore, if you are reporting on that, the question then is, what are you doing about those things? You're going to get, you open yourself up to a lot more scrutiny. And I think for organizations like ours, what we're trying to be is really an independent authority. And I'm glad you used that word. That's exactly the word we aspire to. We want to be objective, independent authority on who's actually, how companies are doing on corporate stakeholder performance and across those stakeholders. And the reporting standards, the availability of data, all of that is going in one direction. And companies, I think, are now, they recognize that, and they're all on this journey that I mentioned. So yeah, I think the market's going to be supplied with a lot more information on how companies are treating and creating value for their stakeholders. The market will use that information to make more informed choices about how to allocate capital, where to go and work, whether it's how to invest based on that. How to, do you want to be a customer or a consumer of those companies? So the market puts that information out there, or the companies put the information out, the market will use it to make more informed choices. And I think that's a good thing.
Well, and that's the true driver of it, isn't it, Ed? At the end of the day, for most companies, it's actually, if it's better business, they'll do better. If we're in capitalism, that should be the goal. So it does having a corporate sustainability report for a good company become a competitive advantage? Is this a good thing do you think, to have published and these reports have to be independently audited, by the way, for whatever that's worth?
Well, it can be a good thing. Oftentimes I'm afraid we mistake the report of an activity with the activity, and those things are separate. And so sometimes self-reports have credibility issues with them. So we also need ways that are not just self-reports. And we have a number of people like Veet Hinnis at Wharton working on that for things like ESG, etc. But that's that's the way things are going to go. They're going to move towards. They're already moving towards, kind of full transparency. There really is nowhere to hide anymore, and that's something that comes with stakeholder capitalism, is a much more transparent view of what business is doing. And for the most part, I think that's a really good thing. Businesses create a lot of value, and at least the business people I know don't, and maybe I only know a small group of them, but they, for the most part, don't want to screw up other people. They want to create as much value as they can. They have some sense of purpose that they show up for every morning, and it's generally not just to make money for shareholders.
Well,
So the only thing I'd add, sorry,
Totally.
Bruce, the only thing I'd add to that is you want the information that's put out to have meaning.
Yeah.
I think the ESG space has traded sort of quality for quantity.
Yep,
So much data out there. Companies are asked to disclose on so many things. It's a real burden, and many companies are overwhelmed with requests for information. And how much of it is really meaningful? That's a question. I think we can do. If we can get that right, companies really believe that they're disclosing on things that are material, that are important to their business status. I think meaning is really the next frontier of disclosure.
Well, we have one question from a viewer from Switzerland, and then we're going to give you guys one last question. And she asks, bear with me, she's Amina. She's based in, I hope I pronounced her name correctly, in Switzerland. And these are questions for Martin and Ed. Where do you see the connection between the purpose of a company, signaling effort towards that purpose, and then trust for the company by customers and shareholders? Shouldn't companies simply act on their purpose, and this would gain trust and other stakeholders? Is action enough, I guess, is her question, I hope. Martin, go for it.
Yeah, I think trust is built through the combination of action and communication. So I have to say what I'm going to do, and you trust me if I do those things. If people don't know what I'm doing, then on a stakeholder issue, it's very difficult to build trust. And this is where it's a subtlety, but I think it's very important that purpose is the North Star. I was at a conference recently where the Nike CEO talked very clearly about the company's purpose. Everybody understood what it is, and it guides them on their decision making around stakeholder issues. And I think stating that, being clear on that, taking actions that are consistent with that, even being open about things you're getting wrong or that are challenging, shows vulnerability, builds trust, builds credibility. But the communication is important, because I need to communicate in a way to my stakeholders so that they are aware of what I stand for, what I'm trying to do, and why, and then they see the action. You got to have both.
Well, and Ed, to that point, purpose. This is why Nike had no trouble when they supported Copernic. This is why Budweiser got killed when they supported a trans organization. They had no North Star. It conflicted. So is action enough, or do we need to communicate clearly our North Star? And then we're going to wrap up with one last question.
Well, as Martin said, action and communication are really important. But it's also important to have a sense of I would say humility here. That look, it's easy to do saints and sinners. If we think most businesses are sinners because only the money counts, that's what the old story tells us. and sometimes there are a few good ones, and they become saints. And then when they screw up, and they always will, they become sinners here. Business is made of human beings, and I don't know any saints, and I don't know anybody who's a sinner all the time, except maybe for some politicians that we elect, and that's nonpartisan coming from me. So we need, part of what the stakeholder mindset is we need to see, and this is why just focusing on that it's better business isn't quite enough. What we have to see is we have to see ourselves and business people as fully human. And that means we're complicated. We have sometimes conflicting desires, etc. And we're not going to be anything other than fully human in business. We're not going to be calculating wunderkinds. We're not going to be one-dimensional maximizers of our own self-interest. We're going to be pretty much fully human. And I think the old story that it's only the money prevents us from seeing that, and leads to an awful lot of dysfunction.
And there are always going to be trade-offs, but the issue is, on what basis are those trade-offs being made? And are those trade-offs transparent? I wonder whether they often are. Martin, let's just focus on the future now. You folks, tell us what you've done. An amazing job. You can count on our support until I drop. Where are you going next? Where's the focus?
Well, thank you. And honestly, thank you for all your support, Bruce, and you too, Ed. It means a great deal. I think what's next for us is actually next year is if you believe it, my 10th anniversary as the CEO of Just Capital, our official 10th anniversary as an organization. We really want to try and build a movement. We think business in America is underserved right now in terms of people believing in it as a force for good. And I think Just Capital can help spark a movement that creates a vision whereby more people in this country feel like business and markets are working for them, not against them. And so that's what we love to do. We want to get companies really competing to be more just. And it feels to me like we're ready in this country for something to believe in that's positive. And I think business is ready to be that thing.
Well, we have a listener or viewer who says, is Alan Steinmetz. He says, and I guess this is almost to you, Martin, it's maybe a suggestion. What do you think about the human experience as a dynamic of driving alignment of stakeholder value and purpose? I guess that's just
I think exactly that. I mean, you talked a little bit about HR and human capital, but human experience at work, in life, is that driver. And I think that's exciting. You talk about the next generation of business leaders, that's what excites me. And I think people will think differently a generation from now. And the three old guys you've got on this call, we're going to be looking back well, maybe, I don't know, we're looking back in 30 years, but people will be looking back in 30 years thinking, I hope, this is my hope for the future, that in fact, we've figured a lot of this out.
So Ed, you have really been at teaching your students, and there are thousands of students that have understood this, but help me understand something. The sustainability issue exploded on campuses about 20 years ago. I think it was about that. But it was all about the environment. How well do you think academia has moved toward understanding that sustainability is about all of our stakeholders, and that the S of ESG is our stakeholders? How far has academia come around to that?
Well, I don't know. I mean, again, I'm not sure I would put it like that. I'm not. ESG is a convenient way to talk about something that's been around for a long time. There was something called a social audit by Apt Associates in the 1960s. That if you look at it, they looked a lot like ESG scorecards, etc. So I'm not certain about that. Sustainability is one of those contested terms that I think is not problematic. It's just we need to think more about what we mean by that. So, you know, what I want to be sure about is that, you know, if somebody says to me, you customers love you because your products and services make their lives better. Employees want to work for you because you treat them with dignity and respect. Suppliers love working with you because you make them better with their other customers. Communities want you there because you're not a community destroyer, you're a community builder. And by the way, you're making money hand over fist. I want to know, are you sustainable? Are you socially responsible? Okay, I don't really know what that means.
Fair enough.
Because I don't think you can be a community builder if you destroy the environment. I don't think you can take care of your employees and treat them with dignity and respect if you don't pay attention to, do they have drinking water, for instance. So I tend to build those things into those stakeholder relationships. You can think about them separately. I don't have any problem with that, and lots of companies do. Students today take the societal issues pretty seriously. They don't know how to deal with them.
Oh, we lost Ed, and we're out of time. So sorry about that we lost Ed at that point. Martin, can't thank you enough for your time. We'll be publicizing.
Thank you, Bruce. Really appreciate it.
Our pleasure. Ed, thank you so much. But you saved us on the time. All right, everybody. Thanks again.
Take care.